Palm Leaf Realty Group at Coldwell Banker here in Houston. And today we are here with a very special guest, Ilse Cienfuegos. I love her name. She's a lovely person and a lender here locally in Houston that can help you with your mortgage needs in English and in Spanish. Today we are here to talk about mortgage rates. What do they mean? What influence them? So for you, it's very standard. Mortgage rates means, the rates that lenders charge borrowers on home loans, and they represent the cost of borrowing the money to purchase or refinance a home. And there has been a lot of talk about rates coming up and down, what's going on, what affects rates. It seems like there is a lot of confusion out there on how are the rates affected. And we know that there are multiple factors, and that's why Ilse is here today, such as the economic influences on mortgage rates, but also borrower-specific factors. And no one better than Ilse Cienfuegos to explain what this all means. So help me welcome Ilse. Hi, Ilse. Good morning.
Good morning, Claudia. How are you?
I'm doing very good. Thank you for being our guest today and to be here to talk about mortgage rates. But tell us just a little bit about yourself. How long have you been in the business? A little bit about your company.
Of course. Well, first of all, thank you so much for having me. It's a pleasure to do this class with you and to educate, our potential buyers in the near future. So a little bit about me. I have been in the mortgage industry for about 6 years now. I come from a background of sales and a lot of service industry when I was younger. So that has really helped bring a lot of those skills and, the desire to help people in this next phase of their life.
Absolutely. I think that's why we connect so well, because that's what we are passionate about here at Palm Leaf Realty Group. We want to make sure we go above and beyond to make sure you're making those decisions, that you are informed, that you are empowered. And a lot of misinformation is going around out there. A lot of people are basing their decisions about probably one of the biggest and most important investment in their lives out of headlines from Facebook and some news channels. And guys, not only are they incorrect, you should be talking to the people that are locally in the market you want to either buy or sell, because even if there is something that is a national, it doesn't necessarily mean it's going to affect us in the state of Texas or in the city of Houston. So, Ilse, we already established that the mortgage rates are the rates that lenders or mortgage brokers, they charge to borrowers for home loans, right? But
Correct.
Tell us a little bit more about rates.
So rates, this is a little presentation that I put together, and we are going to discuss a couple of things. Like you mentioned, rates, there are so many things that impact them, whether it be something in life, something in the economy, or something that relates to the borrower personally. Something about their qualification. And so when we talk about rates, when we discuss rates, it's never a one size fits all. Just like with any borrower, it's never a one size fits all. And so like you mentioned earlier, it's so good to speak to a local lender, because what may be impacting you at a state level might not be something that, other states are dealing with. So every scenario is going to be different. Like you said before, rates are just the interest that lenders charge you for borrowing money. They have to get paid somehow. And so if you don't have your savings or you don't have the ability to purchase in a cash format, then this is going to be your option. So when we talk about mortgage interest rates, a lot of people get confused because you hear a lot in the news of people talking about the Fed rate. And so those things are a little bit different. And so I do want to deep dive on personal mortgage, but I also I want to show everybody the bigger picture of it, because it's so easy to get hung up on it's me. What, it's my scenario or it's this. But a lot of times it's a lot of outside factors that are really driving what happens to all of us personally. So some of the players are going to be your mortgage bonds and your treasury notes. Mortgage bonds are just little IOUs that, people go to the government and they say, here's my money, you get a bond, and the government uses your money. Treasury notes are similar to bonds. They are issued out so that the government can fund its economic, activities and their expenses. And so both of bonds and treasury notes are going to yield interest for you. It's just a matter of how quickly and for how long. And let me know, Claudia, when you would like me to stop.
No, it's totally okay. I actually had made some notes myself as well that I find super explanatory. You are so correct. Like the Feds or the Federal Reserve, they don't directly set mortgage rates. I know that there is a misconception out there. They do not. Do they have some influence? Well, the monetary policies that they make, it may influence the rates, but they are not the ones that say, well, today we're going to be at 8%. Next week, we're going to be at 10%, right? It doesn't
Correct.
work like that. There is a lot of other things, such as what Ilse was explaining, such as the bond market, because the mortgage rates are closely tied to the yield on the 10-year treasury bonds. And when bonds yields rise, mortgage rates tend to rise as well. So there's more to it than just the Feds. And sometimes they don't even affect the decisions that the Feds made do not affect your rate. So that's why I wanted the local lender to come and explain that there is way more to it other than your personal situation and saying that the Feds raised the rates, because it's not how it works. We had an example, Ilse, do you remember, I think a month ago, or I don't know what it was, and there was something with the Fed, and everyone thought that the rates were going to go down tremendously, and actually They went up half a point. So it's not really correlated a lot of times.
Yeah, and it's really easy to go back to look at data of what's happened. And yes, we always end up in these cycles, right? Recession, market does something, as time goes on, you've seen those patterns. I think where this time was a little bit different is that everyone had the expectation of the 10-year to do something that it did not do. It went the other way, and so that's why we were seeing the increase. But like you said, everybody was thinking that it had to do with the activities of the Fed. And so the expectation was there. And unfortunately, some people said, oh, they're going to lower, we're going to wait. And then it didn't happen. So,
yeah. This is the moment I would like to emphasize. If you have seen our videos before, I always emphasize that the right time to purchase a home. And yes, today is more geared towards a home buyer. But if you're looking to sell and buy, this is also applicable to you. Or if you are renting, understand that your interest rate is 100%. So maybe you want to look into see what you can qualify and buy and build that equity and build that money in the bank. But it's more geared towards the buyer. And the right time to buy is when you are ready. If the interest rates were 18, what they used to be, or 12, or even 10, I probably would be like, okay, let's look at what we can do. But 6%, 7%, with all honestly, everyone that is listening to us right now, I pay 28 on my credit card. When we buy a car, there is a lot of interest there. We're talking about a roof over our heads that next to getting married and having children is probably one of the biggest decisions you need to make. Next to what you're going to do with your elderly parents, because I'm going to go through that. So that stuff as well. That's the fourth one now in my life.
And I think we're all going to have to be thinking about that, right? Of housing for our families, because another market, something that does drive markets is what's happening out there with other types of housing. And I don't know if you've noticed lately, but homes for 65 and up communities and stuff, they are appearing, in many places, becoming more common, but they're not going to be very easy to get into, I imagine.
No. And this is a conversation that we have been talking about for a very long time. At least I have been bringing this up. One of the reasons why we are worried about retirement and housing for people of your age and my age, so we're talking under 50, well under probably 40, is housing is a big issue. And the reason why the baby boomers or people over 55 are the ones that are safe right now. And please, if you are listening to us, just think about this. Let's listen to the facts. They purchased homes over 30 years ago. Their houses are paid for. Did you know that over 80% of any baby boomer, 80% has their mortgages paid for? Having a mortgage paid for or having a tremendous amount of equity, meaning that you have a huge chunk of your mortgage loan paid for, and probably you have built value through appreciation in your home, you are now looking into an alternative than your retirement from the government. You're looking at having money in your pocket. So what am I doing right now? Guys, this is very important. I'm helping a lot of baby boomers. We have a class actually coming next year called Downsizing with Ease, because we are helping them sell their home, get their equity, buy something smaller, and have money in their pocket for their health care, for whatever they need. So buying a home is not just buying something that is cute with an island. I'm going to have something in my name. Think about an investment in your future. Think about your later years. The sooner you can buy a home, the younger you can buy a home, the better. You have the appreciation and the equity built. And we are going to have a class about that, Ilse, as well.
Yes, we are.
We are going to talk about that. So think about that.
Ooh.
Another thing I like to bring in, I know that Ilse is going to talk about other factors, but I really want to emphasize this because we are in one of the biggest countries in the world. And sometimes it's easy to forget there is another world out there. And we think that everything happens just to us. Like you were mentioning, it's just my situation. It's what's happening here in my backyard. No. Economy is a global event in our days. It's 2024. No matter how much you want to close yourself from the world is going to impact everything you do. We have wars. We have trade wars, we had a pandemic, we have international conflicts, and there is so much that is also influencing those assets like bonds in the US and the mortgage rate. So that's something I wanted to mention. Please don't forget that we have neighbors around the globe, and sometimes they don't always help us. So to you.
And everyone is running things that they feel is best, right? So it's kind of like you managing your finances really well and your neighbor being $30,000 in debt every month, right? They might impact you, right? Because you live in the same neighborhood. It's going to impact their home. It's going to impact your neighborhood. It's going to impact everything else. So on a global setting, yeah, it's good to remember that we have people outside of our country that really do impact everything that we do. And so, you mentioned the news a couple of minutes ago, and I love that because I was scrolling about a week ago, or maybe a couple of weeks ago, right, when everyone said that the rates were going to do something after the Fed cut. So maybe it was close to a month ago now. But I went through the headlines and I scrolled, right? You can just Google mortgage news today. And you just scroll through the headlines, scroll through the pages, 1 page, 2 pages on Google. Every headline was different, but the same. Rates have fallen 0.1%. Rates remain steady and rising at 0.1%. Yeah. Rates remain unchanged at 0.1%, and so I can understand from a consumer, perspective of what's going on, what's going on. And so just like the consumer is looking at the news, a lot of people are focused on economic reports. What is happening with the country? Are we creating more jobs? Are we losing jobs? Is the economy growing? Are there certain aspects of the economy that are not growing? And if so, why, right? Are we really touching inflation the way we should, or is it out of our control? So all of those things are just a balance of how much do we focus on that. But overall, a lot of these reports will come into play. And so on my Instagram, on social media, I try to put a calendar every week of what is going to happen. Do I expect my followers to know what these reports mean? No. But if you see a lot of stuff on that week, it might be a crazy week. And so that's what I focus on. How much activity is going to push the market one way or the other this week? And so, yeah, so those economic reports will have a lot to do with that. And then we talk about inflation, which is what I think a lot of people are hearing in the news about now, right? Fed will not lower rates because we're fighting inflation. Well, now we have inflation under control. Let's go ahead and cut the Fed rate. So you will notice that some years we do some things and other years we don't, because they're all taking all of this data all the time into consideration. And it's a lot of data.
Yeah, absolutely. Absolutely. I was actually trying to find here the best way to we talk about inflation a lot. I feel like we talk about big words all the time and we just assume that people know what we mean. This is something I learned as soon as you get into real estate. You realize that not everybody knows what a listing is. What is a listing? Well, nowadays people are more comfortable with the words because we have TV shows that, talk about the listings. But before, people wouldn't know what that was,
Sure.
So HOA, a lot of people still don't know what an HOA is. You need to say that is a homeowner association because there are people moving to Houston that don't have homeowner association. They don't have HOAs.
Correct.
So inflation, in your words, Ilse, what is inflation?
When your dollar can't afford as much as it used to.
And what can cause that? Like what are the things that can push us into an inflation?
Oh man. I mean, it depends on the industry, right? But like overspending.
Overspending, yes.
Cost of goods going up and the cost being passed down to the consumer versus everyone else involved in the process.
Yes.
It's always my favorite.
And we had a huge pandemic that we had to deal with, and a lot. I mean, I always think about this. I'm totally okay with the masks. I wore my mask. That's not what we should have done or not done. This is not what this is about. We need to just look at things. When we had so much we had to do to help people, from hospitals to medicine, I mean, the money had to come from somewhere, right? Even if there is a war and we send people to war, the money has to come from somewhere. And during COVID, there was a scarcity of goods. We had a huge problem with all of the goods. I mean, I remember the days there was toilet paper, right, at the supermarket. So all of this is something that now we need to, and the whole world. And again, remember, it's not just your situation, because everyone thinks that is just in their country, their backyard. I can tell you, I have family in many other countries, and it's the same globally. The cost of life has gone up everywhere. Everywhere.
And to add to that, Claudia, it's gone up, right? We have the luxury of the internet where we can go Google what did milk cost back then, right? We didn't have to live it. We knew, we could ask our grandparents or our aunts and uncles that were, a little bit older. Things are going to continue to increase.
Yes.
That is not going to stop. Yeah. I think the mentality with that is that if you see cost of living raise, you as a person are actively also trying to increase your income and your living situation and your life, right? A lot of people don't do that. And so inflation is really, they're feeling it in their pocket a lot because, maybe it's lack of education, lack of knowledge, things like that. But things are going to continue to go up every year. I think that if we have a situation where prices are dropping, then, we're going to have much bigger problems on our hands as far as the economy, because that means we're going to get into a recession and people will lose their jobs. And so then you're going to have bigger problems there. So, for anyone listening, inflation, we don't like it. None of us do. But the moment you learn to accept it, then it's going to stop being that little pebble in your shoe, I think. And you're going to start learning to do more about it.
Absolutely. And I'd rather take inflation any day to a recession. inflation is trying to get us out of the hole that we were in, because it was created by a hole, and it was a lot of money, like overspending, going out all at once. When we have 300 billion people and they are getting checks at home, the money has to come from somewhere. And I'm glad that we were able to help each other, and that help was there, and that we are in a much better place. But inflation is still here at play, and we wanted to talk about this and have an honest conversation about it, because it does influence you. But I also want you, the consumer, to understand what does that really mean, and not just see it exact. I think you have the perfect name, the big bad wolf.
Yeah.
It is the big bad wolf, but maybe the wolf is protecting its cubs, right?
Perhaps.
So, all right, let's talk a little bit more into it.
So we were talking about the Fed, and so I really like this picture, because I do think the Fed is kind of like a puppet master, right? So when the economy gets a little out of control, when the Fed, when inflation gets a little bit, too out of whack, I would say, then the Fed comes in and makes, like you said, monetary policies or decisions, whether to hike the Fed rate, whether to cut the Fed rate, whether to leave the Fed rate unchanged. And so they play a lot of factor. I kind of relate it to a parent setting up your bedtime rules, right? If you're a good person and you're doing all the good things, they might let you go to bed later. But if you've been bad, or you've been misbehaving, or doing terrible things in the market, then the Fed might put a little bit more pressure on you.
Right.
So this is my favorite picture. And, when I talked about not letting the consumer feel like it's just them, this is where I take that back. And I say, but it is you, right? Because if you're a consumer, at the very top left, you see that a borrower wants to purchase a home, they're going to go to a loan officer, right? Like myself. I will originate the loan. And so my company will say, okay, we've created your loan. And so, we're going to open up this credit line. And so that's where you notice that your servicer might change. I closed with Ilse, but I got to pay my mortgage payment now to Chase, or I have to pay my mortgage payment back to US Bank. That's your servicer. That's the person that's going to collect your payment. And so you're going to have, during the life of your loan, it may change a few times. And so that's something that once it goes to the servicer, then they are in charge of collecting your payment as long as the loan is open. But all of these loans, after they're sold to their aggregator, whether it be Fannie, Freddie, Ginnie, they're all essentially packaged and they're sold back as mortgage-backed securities on Wall Street. So if you're a consumer that has an IRA or a mutual funds account or a retirement account, then if you see mortgage-backed securities in it, you yourself are gaining from the whole world of people borrowing loans, which I think is beautiful.
Oh, I agree. Not over 9 years ago, when I decided to get into real estate, when I was led into getting into real estate, because it was way too many people asking me to do it, I did a deep dive. It wasn't just something that I wanted to do with a flexible schedule, because, by the way, there is no flexibility in real estate, and making a ton of money. We all know that we can go months without getting paid. So that's not that. But I saw that the housing industry has a huge role on the US economy. The housing industry has a huge role on everything we do in the United States. Every time we build one house, everybody, we can employ up to 7 people. I mean, just think about it. The plumber, the electrician, the surveyor, the person that does the concrete. I mean, there's so much. One house, 7 people. Now multiply a neighborhood with 100 houses. So I just love real estate more than just selling a home. I'm so proud of my craft. I'm proud of being part of the real estate industry. We employ so many people, and there's so much more, like you're saying, digging deeper, people will understand how important. And that's why we had the crash in 2008. The housing market crashes, the country crashes.
Of course, yeah. And you saw how quickly, and you also saw how quickly people made money off of a crash, right? And And that's always a good class to always do later of, bear market versus bull market and when to go in or not. We won't get into that, today. But yeah, knowing the
We
all
should.
around.
We should
Yeah.
get into it. And the reason is that everyone is thinking that we need to wait for the rates to drop. Right now, I consider we are in the beginning of November, is the golden hour of buying houses. There is a lot of people making a ton of money buying real estate right now.
Correct.
Because this is the moment to do it, because there's still affordability into it. When the rates go down, we go back to that cycle that we saw a couple of years ago.
Well, and we can't leave out the fact that we are already in a very low inventory market because, like you mentioned earlier, people over a certain age, the boomer generation that has all this wealth and all this equity, they're not selling it, and so it's like we're kind of stuck in that sense. So when you talk about rates coming down, I mean, I get a little like, ooh, because, we already have so many few homes. And so, I think it's, like you said, right, if you can do it, if you can afford to do it right now, when people are thinking that no one is buying, it's usually probably when it's a good time to buy. It's kind of like mortgage bond securities during the 2008 crash. People were dumping their stock and some people were shorting it because they could, they could see ahead or at least see the signs.
Yeah. And people are buying. The savvy buyers are out there right now. It's the moment to invest. It's the moment to purchase homes. And I can tell you this, if you are on the fence, you don't know if you should buy, you're renting, guys, I got to tell you something. I have a ton of people that are investors. They are buying a ton of houses right now because they want you to continue renting.
And, I have a lot of friends that still rent and that, I think that they're finally seeing the light of we need to do this now, right? And it's really easy to say, well, I'm only paying this much in rent, but you can never go back to your landlord and say, hey, can I borrow 40,000?
Yeah.
Or can I do a couple of repairs in here? I've paid you for 4 years. Can I? And that investor might say no, but I always tell my friends that anyone that bites the bullet and decides to purchase, whether first time or an investor, they're not any smarter than the next consumer. I think anyone can be a savvy buyer. I think they're just braver.
Right. Right.
I think that they're willing to risk it.
They are willing to risk it. And, the thing is, there is some reasons why you should rent, because if you're not ready, if you're working on your credit, you just moved to Houston, you know which area to buy. I help a lot of people like that. I help a lot of renters, actually. So I understand that there is a need, but if you've been renting for a while, let me give you an example. If you're renting something for $1,500 a month, times 12, that's 18,000 that just went into someone else. Remember, you're always paying a mortgage. It's either yours or someone else's. There is no choice. You are always paying a mortgage. People that rent is like, oh, I don't have all the responsibility. Well, we also don't have any of the benefits, such as tax breaks, homestead. You don't have the equity built that, by the way, you got to listen to our live here with Ilse that we are going to be doing. We're also going to be talking about credit. I have someone coming to talk about credit, you guys. But you're paying 100% interest rate on the rental, right? This 18,000 can get you into a $300,000 home right now on an FHA loan, 3.5%, depending on the tax rate. Guys, we can get you with that money into a home. A $300,000 home is a pretty good home. So think about it. Yeah. So think about it. Yeah. All right. Let's continue.
All right. So, I feel like the whole premise of it is like, why do things change and why do they, fluctuate like the weather, especially Houston weather? So rates rise and fall due to economic conditions. And I just said life, whether it's life in the U.S., life outside of the U.S., everything is all encompassing to, what causes these changes.
Right. Absolutely. Absolutely. What happens in your life if your credit is affected, Are you going to talk a little bit about that?
Yeah, sure. I was going to get through this and then we can definitely talk about that. So this is just kind of like, a little recap of it. But as far as personal, what affects your personal mortgage interest rate? There are so many factors. It comes down to, are you buying a primary home, or is this going to be an investment purchase, or is this a second home, right? Are you looking to get a vacation home? It's also going to be how much money you're putting down. It's going to be whether you're applying alone or whether you're applying with someone else. It's going to have to do with the type of program that it is. Gosh, I know I'm missing so many more, but
No, because there's a lot. There is
there's so many.
yeah.
I've seen rates change or even approvals change, even with whether you have money saved up. Do you have reserves, or are you using down to your last penny? That will also impact your interest rate. And so what I tell borrowers all the time is that, yes, of course, you will obviously, like I said, you take it very personal, right? Because they're looking at your criteria. But that investor doesn't know you. They don't know how cool you are. They don't know that you have a beautiful family and all those things. They're looking at risk. That's going to be the biggest thing. On paper, do you look like more of a risk than the next, not the next person, but as far as this category versus this category versus this category, will you pay? Will you not pay? Do you have a history of not paying?
Right.
We can't deny that, right? If you say, man, I've really changed my ways, but just 6 months ago we were missing payments. Those things are definitely going to be taken into account. It's just, yeah.
Absolutely. We have that a lot. Exactly like you said, Ilse, like we know sometimes, life happens. We deal with our buyers, our clients, sometimes for years. I have clients that I help purchase a home after 2-3 years. When we tell you we're not going anywhere, we really mean it. We will work with you as long as you are willing to put in the work and let us help you. We will help you, and we will get you a key for your home. And sometimes it takes a while, but life happens. People have lost jobs. People have got divorces. People have had tremendous losses in their lives, and all of that can affect your credit. All of that can affect the ability of, can you pay as much as you owe? So we are here to help there. That's why we have classes coming up with experts on credit and how we can give you some solutions for that. And what can we do to help you and clean up that credit history? Because you may have changed your ways, but maybe you went through some hardship, and now we just need to, clean up the house, so to speak.
Exactly. Yeah, do a little housekeeping.
Yes, absolutely. It's all about getting the right information, connecting you with the right people. And I'm so excited that Ilse was here to talk to us about, a little bit about rates and, so for us to have an idea that rates are not that dictated by the Fed. Some of their decisions may affect it, but there is so much more that goes into it. And again, the gist of it is the rate really should not be the reason why you buy the home. It should be if you're ready, if you have the down payment, because seize the moment. The rates will fluctuate, come down. There is something called refinance. Ilse can do refinancing all day long. But the opportunity of affordability, the opportunity to seize a moment that we are seeing it as the golden hour since 2003. This is the moment to buy a home, and it makes me hurt seeing so many people missing the opportunity when they are ready and willing, waiting for rates to drop, and that it can be very, very costly in the long run.
For sure, yeah. And what I always tell my buyers too, especially when the rate conversation comes up, because it obviously always will, and you can't avoid it, but empowering the borrower and letting them know that they ultimately control the interest that they pay is something that I think, it should be talked about more often, right? We get these people 30-year mortgages or 20-year mortgages or 10-year mortgages or 15-year mortgages, but they ultimately get the choice. I have borrowers that come back to me for a second or third purchase, and I'm like, oh gosh, but you just got a new house like 3 years ago. And then I'll have them say, yeah, but I've been paying down a lot on my principal, And so I feel good about it because you gave me the numbers and I was able to go in and make my own decisions about how much I want to pay on my mortgage so that I dictate how much interest I pay over the life of the loan. And I thought
Absolutely.
that was, that was great. That's a consumer taking ownership of all of their financing. And, you can't hope for more than that when someone comes back and says, yeah, you taught me.
Absolutely. One of the conversations that we have at the closing table is exactly that with every single buyer. I'm sure you guys are listening to us. So if you're listening to me and I have given you that advice, please leave a comment because I have. Make extra payments, pay down on your, let your mortgage company know you're making payments down on principal. That will allow you to pay out house faster. And I'm speaking by experience. I actually will be able to pay my house down in less than 10 years because I do extra payments in my home. And I have a 30-year loan because there's no penalty. You can do that if you are able to do that. But it's, again, that's why I love a buyer consultation, Ilse. I love to sit down with the buyer and understand what are we trying to do and start to set them up right from the beginning and long term, not just we're buying this house. It's like, let's think about the whole picture all the way to you having to retire and having that money in the bank.
Yes. I know. I will talk to borrowers when I'm, doing either their application over the phone or we're just doing that initial call. And, sometimes they seem very afraid and I can tell. And then, by the end of the call, I'll be saying something like, oh yeah, and then we could, we do discuss refinancing depending on the market or, oh, by the time you get your second one, or I'll say that at closing, I'm like, yeah, when we get that second home, and they just look and they're like, slow down. But then they're happy and they go, you know what, I could do this again. I get it.
Absolutely.
So it's awesome.
All right. So what did we learn today? Interest rates are influenced by many factors, not just by the Feds, and including your own personal situation. So it shouldn't be the main thing when you're buying a home. If you're ready, if you have a down payment, or if we can get you into a down payment assistance program, the moment to buy is now, is when you're ready, is when you need a home over your a roof over your head, is when you don't want to be throwing your money away on a rental if you are at that stage of your life and paying for someone else's mortgage. This is the moment to do it, is when you are ready. That's what we wanted to talk to you about today. If you would like to be connected with Ilse, reach out to me. I'll connect you. Ilse can also help you in Spanish.
Claro que sí.
Yes. Thank you, Ilse, for being here. I really appreciate your time. Thank you.
Of course. Have a wonderful day.
Bye guys. Till the next one.